So reconciliation statement of cost and financial accounts. So reconciliation statement of cost and financial accounts. Reconciliation statement. So reconciliation statement of cost and financial records. So in non-integer accounts, cost accounts and financial accounts are separated. So profit as per cost account is different, profit as per financial accounts is different. So profit as per cost accounts, it is based on absorption or estimated. Profit as per financial accounts is purely based on incurred, actual expenses you paid, actual income you received, right? So what are the items to be placed only in financial accounts? Items only in financial accounts. Items only in financial accounts. So items only in financial accounts. Items only in financial accounts. Financial accounts. So it won't be placed in cost accounts. What are the items to be placed in financial accounts? We will see one by one. Number 1, purely financial items. Interest on loan, items only in financial accounts. Interest on loan, interest on loan. This is purely financial expenses. It is placed only in financial accounts, not in cost account. Next, expenses on issue of shares and debentures. Shares and debentures including discount. It is to be placed only in financial accounts. Next, similarly, other capital losses. Capital losses means loss on sale of machinery, loss on sale of machinery. So loss on sale of fixed assets, right? Capital losses. Next, similarly, loss by fire not covered by insurance. Loss by fire not covered by insurance. Loss by fire not covered by insurance. Goodwill written off. It is to be placed only in financial accounts, not in cost accounts. Goodwill written off. Similarly, preliminary expenses written off. Preliminary expenses written off. That is purely incorporation cost. It is to be written off only in financial accounts. Next, income tax donations. Any subscriptions. It's a purely financial items. Similarly, expenses on company's share transfer office. So these are the items only in financial accounts. Right. Purely financial, these are all expenses. Now purely financial incomes. These are purely financial incomes. What we have seen above is purely financial expenses. This is purely financial income. Purely financial income. Right. Number 1, interest received, dividend received, rent received, profit on sale of investments or assets. Profit on sale of investments or any assets or plant and machinery, any assets. Number 5, transfer fees received. These are purely financial income, so they won't be find a place in cost accounts. Right. Items only in cost accounts. So what are the items only in cost accounts? Example, rent paid for own premises, rent paid for own premises, that is notional rent, own premises, that is called notional rent. Interest on capital, interest on capital, salary for the proprietor, salary for the proprietor, salary for the proprietor, notional depreciation, notional depreciation, right? So these are the items only in cost accounts, these are the items only in cost accounts, right? So for these two reasons, profit as per financial accounts and profit as per cost accounts will not be tallied, right? How to reconcile these two statements? I tell you the shortcuts, this is very important. Once you understand the shortcuts, automatically everything will fall in line with it. How to reconcile cost and financial records? How to reconcile cost and financial records? Starting point, either profit or loss, you can take either profit or loss, as per cost accounts, is a starting point, right? There are certain items to be added. What are the items to be added? Cost expenditure items, and financial incomes item, cost expenditure items and financial incomes item to be added. For example, over absorbed cost expenditure also added. What is over absorbed? Expenditure in cost more than expenditure in financial. Cost is always based on absorbed or estimation. Financial is always based on incurred. So this is over absorbed. Over absorbed means expenses in cost higher than expenses in financial. Suppose expenses in cost 1 lakh, expenses in financial 80,000. What is the excess amount? 20,000. The 20,000 to be added. Either only cost expenditure item or over absorbed cost expenditure item to be added. Right. Similarly, financial incomes to be added. What are the items to be subtracted? So cost incomes and financial expenditure. What is cost incomes? Example, closing stock. So closing stock is more in cost than in financial. So closing stock more than cost than financial. For example, cost of the closing stock is 1 lakh. In financial, the closing stock is 80,000. Where the income closing stock means always income figure. So where the closing stock will be higher? Cost. How much higher? 20,000. Therefore, overvaluation of closing stock is a cost income to be subtracted. Similarly, financial expenditure. So financial expenditure more than cost expenditure, it is called under absorbed. That is to be subtracted. For example, depreciation as per financial accounts 1 lakh. As per cost account, depreciation 80,000. In financial, we have 1 lakh. In cost, depreciation 80,000. In cost, the depreciation is lower. Therefore, it is under absorbed by 20,000 rupees. So that is to be subtracted. So cost incomes and financial expenses to be subtracted. So the answer you will be getting profit or loss as per financial accounts. That's it. This is the way the reconciliation step to be involved. Suppose profit as per financial accounts is given, reverse you can apply. Suppose profit bar loss as per financial accounts. Given. But what will be the subtraction earlier? No, it should be added, which means cost incomes and financial expenditure to be added because starting point profit or loss as per financial accounts. What are the items to be subtracted? Cost expenditure and financial income to be subtracted. So the answer profit or loss as per cost accounts. So these are the only models available. This is model 1, model 2. So model 1, profit as per cost accounts. Profit as per cost accounts, model 1. Ending point, profit loss as per financial accounts. Model 2, profit as per financial account starting point, profit loss as per cost accounts ending point. These are all statements. So we can prepare memorandum reconciliation account also, we can prepare memorandum reconciliation account. So memorandum reconciliation account. This is not based on double entry. This is not based on double entry. Simply by 2 we can put. So by profit or loss. Loss means negative figure, you can start with it. Profit or loss as per cost accounts is a starting point. Add cost expenditure and financial cost expenditure or financial income. Here we can put two cost income and financial expenditure. Cost income and financial expenditure. Right, here you can put 2, here you can put 2, here we can put by, simply you can put by. So by cost expenditure, by financial income. So same idea. So what you seen earlier, it is plus and minus. Here is going to be by and 2. That's it. So by cost expenditure, by financial income. These are the items. To cost income, to financial expenditure. The missing figure to profit or loss. Profit or loss as per financial accounts. Profit as per financial accounts. That's it. Or sometimes memorandum reconciliation account can be prepared. Memorandum reconciliation account can be prepared on this manner also. By profit as per financial accounts. Profit as per financial accounts starting point. Here by cost incomes. For example, overvaluation of closing stock. Cost income you can put by financial expenditure. You can put here to cost expenditure to cost expenditure and financial income. You can put financial income. The missing figure profit as per cost accounts. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.